Good afternoon. Welcome to OptionsTender. We're going to take a look at SPX on the monthly time frame. We're going to focus on my standard indicators. We're going to look at SPY on multiple time frames and quickly go through around the horn on other indices. Okay, so we're going to make this as fast as possible, but I really want to, on the 65, show you the setup for the bounce. That we were getting a bounce before. We did get that bounce, but it didn't continue. It was actually a wave 4 triangle. And so I want to show you that. I had to do an important video update for members last night to show that I had just gathered that information. So put that out there. So I want to show you now, all you YouTubers. And yeah, so we're doing this video intraday at about 1:31 Eastern Standard Time. So if you want to get these videos intraday, consider becoming a YouTube member for 99 cents. Comes with the Discord and trade alerts if you want individual analysis on tech names, big tech, mostly right now, as we are turning into a bear market, then please consider that, and let's do it. We have SPX on the monthly time frame. We're looking at 1929, 2000, 2025 top, and we have confluence with another trend line from 2008, 2021 here at 2025 as well. So it's important to look at this monthly chart right now because we are ending the month. This is the last trading day of the month. So we'll check that out a little bit closer. And you can see that we're getting a nice reversal candle here. I think that is, we're still going to get in the micro term, we're going to get a little bit of a bounce, but this should resolve to the downside for next month's candle. I think we'll get some follow through there. The continuation and the beginning of our bear market. Okay. So, although we don't have negative divergence here on the MACD, we have the histograms that are fading here. This is a closer look at it, and we'll be looking for this to cross over very similar to right here, and we'll put a little red dot there, just like when we got the bullish crossover, we put the green, and we got the histogram change here. So we'll be keeping an eye on that. We did get negative divergence here. Put our little down arrow. And that was indicating a turn was coming in, and it just so happened to be right into resistance. We have rejected off of those trend lines 4 different monthly candles. All right, negative divergence here, but let me just raise these. I'll start showing you better right here, so you get a better look at this positive divergence out there when we had the turn. And we're getting the sell signal. Not only do we have negative divergence on the monthly time frame, it's huge. This is going to cycle through, and we have a lot more downside to go. This full cycle of the stochastic and MACD, probably to the zero line, is going to happen, if not a full cycle all the way down into bear territory. All right, so we have our early sell signal here, and then we can go to the weekly. We'll go to SPY weekly. We don't have to do that again on SPY, but you see there's the trend line. SPY is getting closer. It looks like SPY actually has histograms getting really close to a crossover there. Let's go to weekly. On the weekly time frame, you see the rejection. We're breaking down from the trend line there. I think we're going to go back and back test that trend line. Also, we're giving up the 20-week moving average. You know, from this point of view, it completely looks like we're breaking down from everything, which we are. But I suspect next week's candle is going to have a nice wick up here by the end of the week. possibly into the next week after that. Either we have some sort of inside candle, or we get a wick up here with a reversal heading lower faster, because we'll be in a wave 3 wave, and it's going to be bigger than the one that we had here. It's going to be less choppier and much bigger. This is the momentum starting to head to the downside. And again, the target's around 560. There's a range. MACD, we already had the bearish crossover after a weekly negative divergence. That's huge. Again, this has to cycle all the way through. We had RSI. You saw how price action was getting tighter and tighter. Finally broke down from that tight movement, and we're starting to break lower with all of these negative divergences. So this is going to play out. We're going to get into oversold territory, and we'll be looking for lows at that point. Same thing. Negative divergence. We had a sell signal again with the crossover here on the slow stow. We have a lot of confirmation happening, you guys. Time and price. I'm not going to look at that because we're not there yet on the weekly. Save us a little time here. On the daily time frame, our traditional technical analysis, we broke down from that bearish rising wedge. We're pushing down. Momentum is to the downside. Our trend indicator is starting to turn. It's up here at the trend, and that's a 20 simple moving average in the yellow. And we're back at support. We're back at that support area where the top of the election gap was, but held on there. Wonderful resistance, support. I know that we dug through there, but we got back over there. You see how important it was here. And what I did yesterday was I relied a lot on 590, I believe the number was. It might have been a little higher. Relied a lot on that and said, hey, we're looking for a wave 2. All right, so we back tested the trend line once already. And I was like, we're looking for a wave 2. Maybe we just go up a little bit higher. And that's where I had the confusion, because we weren't getting that bounce higher. We broke down, which is fine. We have our swings in place anyway. But it could have been more lucrative if I would have identified the triangle before. And I'll show you that on the 65. It'll be a lot more clear. But we made it down to that important level here. And so that's where we have our nice double top look there. And this would be the neckline. We're getting a reversal off of it. Very important area. We're oversold on the RSI. So I expect a dead cat bounce at this point. And now I think we could back test a little bit higher. And you have the 50 here at about 5. Let me just highlight it on the right hand side. We can see that it's about 598. All right, so we're going to put our range from about 598 all the way up to this trend line at about 603, depending on where the price in time gets to. 603 there. So keep an eye on those numbers. 598, 603 will be our target zone, where we'll start adding on to our short swings. And so this is our impulse wave 1. We expect a 2, a 3, 4, and 5. And I think with this being as nice and large, like we really want it to happen, that we talked about before, we're starting to stretch out our moves. And so 3 should be a nice big wave. And we can measure that. I'll do that in the 65. And then we can get into our target area that we constantly talk about. And I think we'll probably hit the lower end of that area at this point, now that we're seeing these waves stretch out much larger. Indicators, once again, made new highs. Negative divergence. All right. Bear crossover. Bearish territory. Momentum is down. We had a trend on the RSI that broke down. We're into oversold areas. The MACD or the RSI, excuse me, was low as, on this one, as low as 16. It's very, very low in the daily time frame. Now, there will be bigger moves to the downside where RSI will, likely touch down to maybe 10. It doesn't get much lower than that unless you're like a Tesla. Slow Stoke, again, that trend to the upside, broke down, heavy move, already cycled through. And I think we'll get something more of a downtrend at this point, and then we'll make some positive divergence eventually. That's what I'll be looking for on the Slow Stoke. All right, time and price. Fibonacci's. So we're in that time cluster that we're talking about, and it appears our low is in. Now, we had a high on the actual 20 at the beginning of this cluster. We had a high here, but essentially this cluster's done, and we have a nice low going into it, and that matches up with the lower time frame too. So beautiful setup. It's going to be temporary. I don't think it'll be much more than a few days. And then we'll see the continuation lower. And then we have some time price going into next week that we'll keep an eye on. We'll have the first, second. So the third is Monday. And we'll be looking towards maybe Thursday or Friday to continue, or maybe where we'll get a high into. All right, doesn't have to go that long. We'll check out the lower time frame. 65. All right, now this is where price I think is going to go. I think that we'll end up with this. Now, let me adjust. I think it'll be in the time frame of FOMC and not in a straight line like that. We'll have a 4 and a 5 down here too. But the formation is really what I want to show you. Traditional look, we have a wedge pattern. And we're talking in the Discord, things look like they wanted to drop even further. It seemed really apparent that price really just wanted to close this gap. It didn't close it by a couple pennies, which is actually kind of bullish, so we're going to get rid of that. Some traders, we had that island gap that filled. Some traders look at gaps from wick to wick. I do not. I go for the close of the day, and I look up at this area here for the C as a close, and then here we would have the open. So that's how I look at mine. So it's the fuller range of the gap. All right, so I'm looking at this bullish falling wedge. We got the lows again. Nice tag there. We put on a lotto for Tuesday's expiration calls at the lows here. And we'll look for this to play out. Might even take it off today. We'll see. We'll see where the candle ends up. Do we end up back at the options expected move? That's a possible scenario. Oh, and I had time and price. I was just lining that up. I actually thought that price might be up here by this time and price, but you can't really predict exactly where it's going to be. But the setup came in to where time and price was today as a low. All right, that's perfect. And now we can play that. So I suspect the wedge will break out. We'll probably get some sort of back test and a move higher into that. Here's 598 would be about this point. I think that's a little bit shallow, even though that's where the 50 moving average is. I think it's more likely to get to that 601, maybe that 601 area. And we'll look at the Fibonacci's as well. Again, FOMC is 319. We'll be looking for a low at that point. And then the indicators are telling us this is a bullish divergence. This could have burned through, but the setup is nice, and we're getting some positive results. A nice hammer candle, and I forgot to mention on the daily time frame we have an inverse hammer, so potential reversal candle. So the setup is there as well, and we had the histogram heading upward with positive divergence on the MACD. And then on the RSI, we're going to get this tightening, just like the wedge is tightening up. We're getting this tightening price action on the RSI with positive divergence. Okay. Now, no setup's perfect, but this is beautiful. And positive divergence on the slow stoke. All right. And so, again, I want to talk about this. I think I talked about it last night's video. So we have a lot of room to the downside, right? So we could have just burned through and continued this sell-off right there, but nothing really goes in a straight line, not, especially when you have so many buyers at a top here. I do suspect that the MACD will cycle lower, and probably, if not lower than this point here, it's a -7. But I just think it's going to look like a downtrend, and we'll have a nice downtrend line here that we'll point out. And this goes lower, and then we'll probably make some more positive divergence at a lower point. So this positive divergence will give us a bounce, but I do think that it's going to burn through after the bounce. And a good example, maybe, I don't have the positive divergence here, but maybe similar to this one where you think you have a low here. We had the bounce and then burn through it. All right. I'm not going to spend too much time looking for an example. Let's go to see about the other board. Okay, so here's how we're counting it. Plus we have this wedge bottom that I think will come down to, and that's about 555. So if that comes into time and price that we're looking at in FOMC, that brings us right to the bottom of the wedge. We'll see if that's the case. And at this point, we're looking at wave 1, 2, and I was looking at this being 3, 4, and 5. So that's why I thought this might be an A, B, even when we got lower here, a B and a C expanding flat, but we made these new lows. But what I did not identify and catch soon enough to warn everybody was this was a possible wave 3. And the 4, you only get triangles in a B wave or a 4 wave. And this is an A, B, C, D, and E. Perfect triangle. And we broke down from the triangle for wave 5 and clearly got the lows in here for the positive divergence in the wedge here. And we had that, I'll adjust the time and price here to this low. So either way, we got the low today, even though we made a brand new low right there. And we're sort of holding that 585 level. It's super important right now. And so I'm going to look for some sort of ABC. Hopefully it's a zigzag type pattern. If we can identify early that it's more of a flat pattern, that's fine. But wave 2s are typically a sharp zigzag type formation. So we'll look for some sort of reversal 5-wave move up into maybe the 382, then a B wave. It could be anything. That's why B waves are so difficult. Triangle, flat, anything. And then a C wave into time and price, which we have that time and price starting off with March 6th. And so that's what is it, 3rd, 4th, 5th? That's Thursday. So yeah, it lines up with the daily time frame to where possible Thursday into Friday is our reversal here. But we'll be, adding in already to our short positions as we get up to that 598. Notice that's the 50% retracement from this entire move. I might have to adjust this just a little bit. 598. Let's get a perfect low here. Low is 582.44. And so the exact number is 597.84. That's right with the 50 moving average. And so we'll get a reaction off of this. So even if this wave A comes all the way up to the 50-day moving average, this will be the 50%. We'll likely get some sort of reaction off of this, if not the actual high of the retracement. And then above it, we have that 601, where I think it's more likely to hit with a nice large retracement. So it could be, the A, B, and C into the 601. It doesn't have to be perfectly symmetrical. So just keep that in mind. This could be a real short one. Maybe we get the A all the way down here, not even to the 382, and then a nice large C wave up there. That's why it's so difficult, and we'll give ourselves some time. That's why I put most of the trades out till Friday. Give us a good chance to wrap around the meat of the retracement, and then really start to position ourselves to the downside. All right, quickly now, take off the moving averages, leave only the moving averages, and let's just go around the horn. We had these lows here that was, we didn't quite tag that actual support, but we had a good zone here for lows. We got to that point, and notice how the Qs are leading to the downside, much more stretched out. This no longer is going to be a target for us. We're going to look for a nice large move, much lower, and I'll get those targets out for you. As a matter of fact, I'll do the SPY one for you today, and then we'll get for members or maybe another video or something, we'll get the other targets out there. I think I had one lined up. Yeah, because we thought the bottom might have been there, so that was a projected here. I'm not going to do a perfect one. We have our lows right about there, so we're at the lows. And then the possible high of that move, let's call it the 62, and we can adjust it later. So we'll be looking for our wave 3 to actually be lower, maybe a spike through here, unless price goes up higher. We're looking for about 552. Now that's lower than the actual zone that we got to. So, hey, I don't doubt that at all. If this starts moving, then wave 3 should get down really low to this point, and maybe wave 4 and 5, it could be really shallow, as a matter of fact. So we'll see how this plays out. Maybe 4 and 5 just kind of make just another low right into the 62% retracement. And so what the bulls will be looking for in this situation, if this plays out perfectly like that, the bulls will be looking for this being a low here, and then a 1 right here, a 1 at that high, an A expanded B into a 5-wave move down to a C for wave 2. All right, so we have our C wave there along with the wave 2, and now we can count out this 3. Let's see if we can highlight that. Got a text note there. 3 all the way down here, 4 and 5, wherever that might end up. And it could be lower if the 5 wants to stretch out more and break down that setup for the bullish scenario. It can go down even further if it needs to. Remember, if this is a start of a bear market, it's going to be a nice large move to the downside and just destroy setups where people will start to go long. So it doesn't have to be perfectly into this megaphone where we get the bounce at, but we'll keep it just in case that's where price wants to move. All right. So Qs, again, 552. If we retrace all the way 601, 552 will be our third wave target. Big move. All right, with the Qs, we're holding on to that wedge. Did not make a new low. As a matter of fact, made a higher low. So that's a positive look for the tech market leading to the upside. And I think the retracement will be steep, as in the 62% retracement is up here near the downtrend line that we have identified. So that's where we'll be looking for this target. Could be a little bit lower with the 50%, but we will be looking for, or we'll be scaling into those at the 50 anyway. All right, IWM appears that it has an impulse wave in, and so it needs to retrace. Now we can look at this as an A, B, or we can look at this as a 1, 2, 1, 2, and then you have a much steeper move headed after that if that's the case. So DIA, the diamonds look like it. Now we have positive divergence, I would guess. Yep, we have our positive divergence here on the diamonds. So I suspect this is a 1, 2, 3, and I think this is a wave 4 expanding wedge, and we just got wave 5 in right here. 1, 2, 3, 4, 5, and we'll look for this one to retrace as well. VIX, and what we had to identify in the VIX is, and you see that clearly it's going higher. What I think it's doing, first of all, is getting negative divergence. So we're looking for this to reverse. And we also had readings that suggested that the VIX was going to that the market would have a positive day. And it doesn't look like it could be today, or it could be Monday, where we really have a positive outcome for that indicator. But what I want to show was on the daily time frame, showed this last night. I was like, look, it's breaking out, right? I think we have a retracement for the breakout, but notice where the weekly, I know it's still on the daily time frame, this is still a range. All right, I know it's peaking above here. We have such a volatile movement, but I don't think this is the breakout yet. I think we back test first, and clearly if this continues to move to highs, then the market is tanking, right? But we're breaking out. We have the inverse head and shoulder. We have the left shoulder, head, right shoulder. I just think that the market's setting up a 1, 2 setup, and then higher from there. So we'll see how that goes. All right. The last thing I want to show, and just since we're talking about recessional indicators, the first indicator that we're starting this recession that I was looking for was the 2-year, the 2 and a 10-year. So from the FOMC site, this CME group here.com, we go into the 2-year yields, and you might have to change it. We have the 2-year yield, and with this yield curve, we added on the 10-year. So we have the 2-year, 10-year, and before, this is the 2-year. The 2-year was up here in the 4s, and the 10-year was down in the 3s. It was inverted. Okay, now it's uninverted, and that was the sign that the recession was coming when it uninverted. So we're in a normal state now. You are in a odd situation when you pay for a 2-year Treasury note. You pay more, or you get more of a yield from a 2-year return than you do on a 10-year. That's just an odd situation. You know, it's not right. You'd buy the 2-year for sure. to get returns that are higher than a longer term yield. It's just not normal. And so now it has normalized. A recession is coming. That's the first indicator. That's what I just wanted to point out real quick. All right. Well, thanks for joining us here at OptionsTender. Have a wonderful weekend. I'll look to make another video sometime Saturday or Sunday, and we'll go from there. All right. Thanks for all the support and the likes and subscribe. We'll talk to you soon.